Hello everyone, my name is Nitin Nahar. I had secured rank 6 in my CA final exams in May 2013. I welcome you all on behalf of JK Shah classes to this amendment video. Now, this amendment video would cover amendments from 1st March 2024 till 31st October 2024. That means the amendments applicable for Jan 2025, which was uploaded with a quick revision video before the examination, which is already available on JKSC YouTube channel, that will again be covered in this. Say suppose you have not covered any point, that can be covered from this video, and the amendments which are applicable for May 2025 exams. As of now, the statutory update is yet to be released by Institute, but as you know, Institute has released new ICAI modules. So based on that new ICAI modules, all these amendments are prepared. The notes of this is available in the description. Plus, these amendments which you are going to see, these are based on ICAI module. Some other amendments, like there is an amendment on circular issued with respect to ESOPs, employee stock option plans. There is one amendment relating to insurance salvage value treatment. Those circulars are not there in ICAI module May 2025. So I am not covering it. That is covered in CA final amendment video, which is already on YouTube, but that was because Institute has covered those circulars for CA final but not for inter CA. So I am keeping it strictly based on ICAI module or statutory update as released by Institute. Now after this video is released, if there is any additional amendment in the statutory update, then in that case a separate video will be added. Clear? Okay, so with this, let's begin with the amendments. Now, this is the PDF which covers amendments from 1st March 24 till 31st October 24. This is the cutoff date for May 2025 exams. Other Finance Act Part 2 related changes of 2024 are not applicable for May 25. That will apply from September onwards. Let's start with the amendments. Let's first cover time of supply and place of supply. The first amendment or circular which is introduced is relating to hybrid annuity model contracts. Now, what is this hybrid annuity model contracts? See, whenever construction and maintenance of national highway contracts are given, it works on hybrid annuity model. The person will collect some amount from toll charges, the person who has constructed the road, plus government will also make some payments towards making of that national highway. Now government would make payment in annuities. The question which arises is, what is the time of supply for hybrid annuity model? Now let's trigger the provision. There is a provision relating to continuous supply of service. When can some transaction be called as a continuous supply of service? When two conditions are satisfied. One, the agreement or contract is for more than 3 months, plus there is periodical payments. Now if these two conditions are satisfied, then in that case it becomes a continuous supply of service. Imagine this with construction and maintenance of national highway. Is the contract for more than 3 months? The answer is yes. Are there periodical payments? The answer is yes, there are periodical payments, because in hybrid annuity model, payments will be made on periodic basis. So when both the conditions are satisfied, it would be a continuous supply of service. And as it is a continuous supply of service, the next question which arises is, what would be the time of supply? Now the time of supply for continuous supply of service is invoice date, receipt of payment date, or due date to issue invoice. Now this due date to issue invoice depends on three factors. First, if the payment date is ascertainable from the contract. Now if the contract clearly says when the payment is to be made, then date mentioned in the contract. If the payment is not ascertainable from the contract, then date of receipt of payment. If it is based on completion, then date of completion of each event specified in the contract. Now, in case of road construction, the contracts are of this type. So the time of supply for construction industry would be date of invoice or date of payment or date of completion of each event which is specified in the contract. That's how you will derive the time of supply. Let's have a look at the circular. Clarification on time of supply for services under hybrid annuity model. In a hybrid annuity model contract, the construction and maintenance of national highway by National Highway Authority of India involves staggered payment over time. How is time of supply determined for the GST purposes? That was the question. Let's see what CBIC has clarified. Under hybrid annuity model contract, which involves continuous supply of service, the time of supply for construction and operation and maintenance will be determined as follows. If the invoice is issued before or on the specified date or completion of event, the time of supply will be date of invoice or receipt of payment, whichever is earlier. If the invoice is not issued on or before specified date or completion date, then the time of supply will be date of provision of service, that is that specified date, or date of receipt of payment. Further, installments or annuities paid by NHAI to concessionaire. Concessionaire is the road contractor. Includes an interest component. This interest will be included in taxable value as per section 15. This you are already aware that interest on delayed payment of consideration for a taxable supply will be liable to GST. Say suppose I am selling this digital pen and the customer does not pay. I will charge interest. Whether GST will apply on that interest? The answer is yes. Same way, hybrid annuity model construction contracts. Is GST applicable? Yes. If interest is charged, then that interest will also be liable to GST. That's what is mentioned. Okay. Then this second one is a very important one. This was asked in Jan 2025 exams as well. What would be the place of supply when a supply is made through e-commerce operator? Now let's take one example. A is the supplier who is in Karnataka. He has ordered some goods online and okay, he is the supplier. B is the recipient who has ordered some goods. Now the recipient is in Maharashtra. Now here the order was placed, invoice was done, in B's name. A being the supplier, A raised the invoice in B's name. And the goods were to be supplied to C, who was in Gujarat. Now the question is, what would be the place of supply if the goods are delivered to Gujarat? Now, if you see this carefully, this is a bill to ship to transaction. Now 10(1)(b), section 10(1)(b) of IGST Act says, when the goods are delivered to the third person, when the goods are delivered based on direction of the third person to recipient or any other person, then the place of supply would be principal place of business of such third person. That means whoever has ordered the goods, that would be regarded as place of supply. So as per 10(1)(b), the place of supply would be Maharashtra. Now there is one more provision, 10(1)(ca), which says supply to unregistered person. The place of supply will be, if address is available on record, then such address. If no address is available of the recipient, then location of supplier. This is what is mentioned in 10(1)(ca). Now here the problem is, if this person is an unregistered person, if B is an unregistered person, now there are two addresses available. One is Maharashtra address, one is Gujarat address. Which one to use? CBIC clarified that whenever supply is made to unregistered person, then you will have to follow 10(1)(ca), you cannot follow 10(1)(b). That means the place of supply 10(1)(b) will be only when B is a registered person. If B is a registered person, then Maharashtra, because then 10(1)(ca) does not apply. If B is not registered person, which is our case, then in that case we have to apply 10(1)(ca). Now in 10(1)(ca) it says if address is available, then such address will be used. Now two addresses are available. Which one to use? CBIC has clarified that wherever the goods are delivered, that should be recorded as address of delivery. And that should be recorded as address of recipient. So the place of supply will be Gujarat. What should we do in exam, sir? Say suppose there is a bill to ship to transaction. Now if recipient is registered person, then place of supply will be location of that registered person on whose direction the goods were delivered. To put it in simple terms, 10(1)(b) will be used, which is principal place of business of the third person. If recipient is unregistered, then you will use 10(1)(ca), and then where the goods are delivered, that will be used. So be careful about this. Now the circular only talks about this, and this has been already asked in JAN exams. Institute may also test you on this. So be very careful on these two aspects. Yes, better you make a note of this entire thing by pausing the video. Then you can have a look at the circular with me. Okay. Now let's have a look at the circular. Issue. Mr. A, an unregistered person, orders a mobile phone from an e-commerce platform. The billing address is in state X, while delivery address is state Y. Careful, unregistered person only, because if it was a registered person, you will apply 10(1)(b). 10(1)(c) does not apply to a registered person. What is the place of supply for this transaction? Is it state X, that is billing address, or is it state Y, that is delivery address? Clarification. Place of supply determination. In case where the delivery address differs from billing address, the place of supply for goods will be address of delivery recorded on the invoice. Therefore, in the given scenario, place of supply is state Y, where the mobile phone is delivered. Invoice details. For transaction involving goods to unregistered person with different billing and delivery address, supplier should record the delivery address as address of recipient. Wonderful circular. Circular is telling what should be the address of recipient. So it is not the person who has ordered the goods. It should be the person to whom the goods were delivered. Okay, now let's have a look at amendments relating to exemption and RCM. Yeah, new entries of exemptions have been added. Let's have a look. Easy entries. Let's see one by one. Okay, the first one is relating to Ministry of Railways, Indian Railways, when they provide service to individuals like platform ticket or those electric battery operated cars for movement within railway station, or cloakroom renting. All these waiting room renting will be exempt. So about 1.5-2 years back, government had brought Ministry of Railways completely under forward charge, and all the services were taxable. All services. Now few exemptions are given, because at that point of time all services became taxable. So platform ticket, renting of rooms, waiting rooms, all this became taxable. But when these are being provided to individuals, government felt that the burden would be on those individuals, and hence an exemption should be given. So sale of platform tickets, renting of rooms, waiting rooms, cloakroom services for storage, battery operated car services will enjoy a exemption. Okay, plus service provided by one zone or division under Ministry of Railways to another zone or division of Ministry of Railways is exempted, because these are distinct person. State-wise registration is mandatory, but government has said between railway ministry, different divisions providing service to each other, GST would not be applicable. Other than that, say suppose JK Shah classes Bangalore provide services to JK Shah classes Mumbai, whether GST will apply? Yes. But what about one zone of Ministry of Railways to another zone of Ministry of Railways? No. Okay. Then this entry you would have already seen. See, this is already there in the law. You would have already read this much, because this much was already there in the law. But it's important to understand the background to understand the amendment. These 2 points are amendments. You can also mark. Now, renting of residential dwelling for use as residence is exempted. You are already aware of it. See, renting of residential dwelling is exempted, but there is an exception. What's the exception? Exception is when it is given to a registered person, then it is taxable under RCM. Correct? Yes. Now, if this registered person is a sole proprietor, using it for his personal use, in his personal capacity, then in that case, this is exempted. This was already there. Remember, this is for use as residence. If it is residential dwelling for commercial, then it is taxable. And when it is given to a registered person, it will be taxable under RCM. Commercial property, anyways taxable. Nothing to discuss on that. Now, this was explanation 1 in the law, saying that a sole proprietor taking a property on rent for his personal use, for his in his personal capacity, then in that case it should enjoy a exemption. Now, one more issue which was happening and was being deliberated in the courts was PGs. PGs, hostels, whether you can call them as residential dwelling for use as residence, because PG and hostel services are normally provided to unregistered person. So the trade and industry was taking a position of exemption, but our department officer said no, it is not a residential dwelling, it is not for use as residence, you cannot get an exemption. They used to come up with their arguments, and this was traveling in courts. That's when government did something. Government said PG and hostel renting is not covered by this entry. Oh sir, if it is not covered by this entry, that means PG and hostel will become taxable. Correct. But they added one more entry saying that PG and hostel, if they are charging 20,000 per month or below that, then in that case it will be exempt, provided that the minimum period for renting is 90 days. Minimum period of renting is 90 days. At least the student or anyone living in PG should stay for more than 90 days. Then this exemption of this 20,000 per month will be applicable. So for now, government has very clearly said that the exemption will be available to PG hostels, but there will be a restriction 20,000 per month plus minimum period of renting 90 days. If both the conditions are satisfied, exempt. If any of the condition is not satisfied, then it will be taxable. So very important for your examination. Institute can create a very good question on this. Be very careful on this. Let's now have a look at the entry. See, renting of residential dwelling for use as residence. This is already exempt, except when residential dwelling is given to a registered person. Except meaning this is taxable. Explanation 1 was already there. This exemption shall cover a registered person. Exemption shall cover who is a proprietor of a proprietorship concern, rents the residential dwelling in his personal capacity for use as his own residence and on his own account and not that of the proprietorship concern. Now explanation 2 is added. Nothing contained in this entry shall apply to accommodation service for student residence, accommodation service provided by hostel, camp, paying guest accommodation and the like. Supply of accommodation service, very plain language. Supply of accommodation service having value of supply of less than or equal to 20,000 per person per month, provided that accommodation service is supplied for a minimum period of 90 days. So there is a minimum period. If that minimum period is not met, then the exemption will not be available. Clear with this? Yes? Okay. Okay. Now, there was an entry relating to transmission and distribution of electricity. Now, transmission and distribution of electricity exempt. But what about meter change charges, duplicate bill charges, meter shifting charges, ancillary service charges, which is charged while providing transmission and distribution of electricity? Now there was a CPIC circular saying that meter change charges, duplicate bill charges, all these are not covered specifically by exemption. As it is not specifically covered by exemption, it should be taxable. Now government has added an entry. Now see this. Supply of service by way of providing metering equipment on rent, testing of meters, transformers, capacitors, application fee for providing electricity connection, releasing electricity connection, shifting of meters or service lines, issuing duplicate bills which are incidental or ancillary to the supply of transmission and distribution of electricity by way of transmission and distribution utility to their consumers. Now all this have been exempted. Okay. Then one entry has been added, supply of R&D services against consideration in the form of grants. Because big companies, Infosys, Reliance, they give grants for R&D services. Who does this R&D services? Government entity or a research association, university, college or other institutions notified under 35(1) of Income Tax Act 1961, provided the same are so notified at the time of supply of service. So income tax has a benefit under 35(1). All those research associations, university, colleges or institutions which are notified there, if they provide research and development activity and in return they get grant, these grants are normally given by big companies, then the grant which is received by government entity or research association or university or college or other institutions which are notified under 35(1), then an exemption would be available. On such grants there is no need to pay GST. Why is this grant given? These grants are given so that these universities or research organizations develop some new product, and then when they develop that new product, the company which has given the grant, they get the first right to refuse. I mean, once say suppose I have developed some new product as a university. Now when I develop this new product, I'll say I want to sell the rights of this for 5 crores. Now the Infosys which had given me the grant for doing test etc. to bring that product, they will get the first right to buy my product. That's the reason why grants are given, and government has said that grants will not be liable, because there could be another possibility that the grant is given but after doing research as well nothing came out, there was no new product developed, then in that case nothing will happen. Anyways, for now, if grant is received by these people, exemption is available. Okay, then try to recall this. CBSE, ICSE and state boards are education institutes but for limited purpose of conduct of exam. Do you know this? All these are education institutes but only for the limited purpose of conduct of examination. Correct? Now, when they are education institute for limited purpose of conduct of examination, whatever fee they collect for conduct of examination, that is exempted. What about affiliation fees? Because if you want to put CBSE, your school is affiliated to CBSE, then you'll have to take approval from CBSE and pay affiliation fees. What about that affiliation fees? That will be taxable. There's a CBIC clarification also on that. Now government has said that affiliation services provided to government schools is exempted. So affiliation services provided to government schools is not liable to GST. That's what has been added now. So now new exemption entry is introduced. Let's have a look. What about private schools? GST will apply. Service of affiliation provided by central or state education boards or councils or any other similar body by whatever name called to a school established, owned, controlled by government or government authority or government entity will enjoy an exemption. So for government schools, affiliation fees will not be liable to GST. Clear? Okay. Then there was this entry for National Skill Development Corporation that has been enhanced and it has been made wider. Plus, you remember NCVT, National Council for Vocational Training. Now first its name is changed. It has now become NCVET, National Council for Vocational Education Training. And NCVET, any course which is approved by NCVET is exempted under education entry. Now they have added NCVET under this National Skill Development Corporation entry also, that NCVET providing courses under this entry also will enjoy an exemption. Let's have a look. First of all, it's very wide. Any service provided by National Skill Development Corporation, and though you say in relation to, but you will find that the wordings are very, very wide. Or National Council for Vocational Education and Training, awarding body which is recognized by NCVET, assessment agency which is recognized by NCVET, a training body which is accredited with awarding body status by the NCVET. Now one more change has happened in this entry also, but that change is not there for May 25. Remember these 5 things. 1. National Skill Development Corporation. Second one, National Council for Vocational Education Training. Third one, any assessment agency which do assessment. Training body which actually provide the training to the candidates. In relation to first one, National Skill Development Program or any other scheme, very wide, implemented by NSDC. Vocational skill development courses, this will be done by National Skill Certification and Monetary Reward Scheme. National Skill Qualification Framework, aligned qualification or skill approved by NCVET as part of a qualification program. So this is just to make the youth employable. So all these programs have been started for making the youth employable. So any fees paid for all these skill development courses will enjoy a exemption. It's been made wider. Then you have National Council for Vocational Training has been substituted with National Council for Vocational Education Training. Okay. Then reinsurance of exempt insurance services will also be exempted. Say suppose the main insurance is exempt, like you have Aam Aadmi Bima Yojana, you have Varishta Pension Bima Yojana, you have Atal Pension Yojana. All these yojanas are exempt. Now say suppose one insurance company is providing services to customers. Now what this insurance company can do is they can do a reinsurance. Reinsurance meaning they will say, see, I have collected this much premium, you also share some premium, you also share some risk. Earlier this company was taking full risk. Now 40% of the premium they have transferred to this company, and 40% of the risk is to be managed by this insurance company. So insurance company 1 is providing service to insurance company 2. This is called as reinsurance. This is the main insurance and this is called as reinsurance. Now if this is exempt, then reinsurance of that service will also be exempt. That's what has been added. Let's have a look. Reinsurance of exempt insurance services will be exempted. Retrocession means reinsurance transaction. It's a type of reinsurance transaction only, whereby part of the assumed reinsured risk is further ceded to another Indian insurer or cross-border reinsurer. You can get it done 2 to 3 times, no problem. If this is exempt, all the transactions of reinsurance and retrocession will be exempt. Okay, then let's have a look at some clarifications. Affiliation services provided by university to colleges, whether GST will apply? The answer is yes, GST will be applicable as it is not exempted. Affiliation services provided by central and state education board to schools. Affiliation services to schools. If it is government school, then it is exempted. If it is other than government school, then it will be taxable. Okay. Then incidental or ancillary charges related to goods transport. See, a person providing GTA service, goods transport agency, also provides loading, unloading, packing in relation to transportation. So the question is, what about this loading, unloading, packing, etc.? Whether this loading, unloading, packing, etc. will be exempt? The answer is yes, it will be exempt when provided to unregistered person, because GTA providing service to unregistered person other than specified person is exempt. GTA providing services to specified person or registered person is taxable. There are two options, one forward, one reverse. Either GTA can pay under forward, or the registered person or specified person has to pay under RCM. So anyways, in both the cases, the main point is GTA providing loading unloading services. What is the principal supply? The principal supply is transporting goods. So all ancillary services provided by GTA are treated as composite supply. If these services are not part of transportation and are invoiced separately, they are not treated as composite supply. If it is not part of transportation and you have completely done the invoicing separately, saying that this is a separate transaction, then it will be covered by forward charge and it will be not a GTS service. Okay. Let me give you an example to test you. GTA says I will transport the goods from point A to point B. 100 rupees is being charged for transportation, 30 rupees for loading unloading, total 130. This will be GTA service. But say suppose this 30 rupees is being charged by someone else. There is a GTA which is to do the transportation, but they say that loading unloading is completely separate. We don't do it, there's someone else, it will be invoiced by them, we don't take care of it. So you receive a separate invoice of 30 rupees from someone else. Then in that case it is not part of transportation and it is invoiced separately. It is not part of transportation and it is invoiced separately. Then in that case this will be called as GTA service. This will be called as loading unloading service. Clear with this? Yes. Okay. Now one change in RCM is service related change. RCM on immovable property. Now remember one thing. There has been one change relating to goods RCM also. Metal scrap. But goods RCM is not in inter CA. Yeah, it might be there in CS CMA, but it's not there in inter CA. Goods RCM, please. There has been a point which is added in goods RCM. It's there in CA final amendment video, but for inter CA the topic itself is not there, so please don't read it. I mean, even if you see some video which says goods RCM metal scrap amendment has happened, ignore it because it's not applicable for your exams. Okay, talking about service RCM, one entry has been added additionally. Now see, earlier there was already an entry which said residential dwelling given to a registered person. Residential dwelling given to a registered person. Who will pay the tax? Registered person will pay the tax. Correct. Now what about other than residential dwelling? Other than residential dwelling, if the supplier is a unregistered person and the recipient is a registered person, then it is covered under RCM. Careful. In first case, which is already there in your syllabus, supplier can be registered or unregistered, doesn't matter. It will be a case of RCM because what matters is who is recipient, because here there is a plain language, residential dwelling given on rent to a registered person. But now other than residential dwelling, that is commercial properties. Commercial properties, be careful, this combination has to be met. Supplier should be unregistered, recipient should be registered, only then RCM will apply. This will be part of the bigger question, the first question in your examination. They will cover it there. They can give both the things. They can say supplier of office premise was unregistered. Then don't worry, because you will be calculating for a registered person, pay tax under RCM, take input tax credit, pay tax under RCM at the end. Two treatments are there, correct? Second, they could give you that commercial property taken on rent from a registered person. Then in that case, forward charge. So if you are solving for this person, then it will be forward charge output. If you are solving for this person, recipient, then it will only come in ITC. Don't start paying RCM on this. Careful. They can mix it up. They can give you residential property also, they can give you commercial property, but chances of asking commercial property is very high. Reason? Normally they give a question of a business entity for whom you have to calculate GST payable. He will or normally take a other than commercial property, and when he takes a other than commercial property, you will have to do the computation correctly. Just be careful of this one point, which is very important for your examination. Write this and keep important for examination. One day before the exam, see this very carefully. Okay. Then now let's move to input tax credit. Okay, so talking about ITC section 16, one more subsection has been added. Let me give you some background relating to this. Now say suppose a person's registration is cancelled. Say suppose 23-24 his registration was cancelled. Now once his registration is cancelled, he will apply for revocation, correct? Then he would get a order of revocation. Now say suppose by the time he got order for revocation, 30th November 24 is over. What's the significance of 30th November 24, sir? This 30th November 24 is the last date to avail any ITC pertaining to 23-24. Because you can avail ITC only by 30th November after the end of the financial year. Correct? That's what the law says. 23-24, the last date by which you have to avail ITC is 30th November 2024. Now, if this 30th November 24 is over, then he gets this order of revocation. Can he claim any pending ITC of 23-24? The answer was no, and department officers were denying ITC, saying that now you cannot. But please understand, once his registration was cancelled, was he technically permitted to avail ITC? No, because from the effective date of cancellation, system will not allow you to file any return. That's why government said, we'll give you 30 days time after this. So the last date to avail ITC for 23-24 would be 30th November 24 or 30 days from order of revocation, whichever is later. So you will get more time if registration has been cancelled and you have applied for revocation and you get the order of revocation, then within 30 days from the order of revocation you can avail the pending ITC, which you couldn't claim because this 30th November was over and you were not registered at that point of time. Clear with this? Yes, very important for examination. Let's have a look at the wordings. Section 16, conditions to avail ITC. ITC in case of cancellation and subsequent revocation. If a person's GST registration is cancelled under section 29 but later restored through section 30, cancellation, section 29, 30 revocation. Either by appellate tribunal, appellate authority, court order, then they can claim the input tax credit for invoices or debit note from the time before the cancellation, provided ITC wasn't restricted at that point of time. The person can claim ITC in the return under section 39, that is GSTR 3B, by 30th November following the financial year, or before filing annual return, whichever is earlier. This timeline you already know. ITC can also be claimed for the period between the cancellation date and revocation order, as long as the return is filed within 30 days from revocation order. So all the ITC can be claimed. In short, ITC can be claimed up to the later of these two deadlines. Which are the two deadlines? One is 30th November or date of filing annual return, which is the normal time limit, last date to avail ITC, or 30 days from revocation order. Okay, then ITC is not available if tax is paid based on any order which is confirmed by department for fraud, willful statement or suppression of facts. If there has been a case of fraud, willful misstatement, suppression of facts, then ITC is not available. This you would have already read. What now they have done is they have added this under section 74. This under section 74 was missing. Now they have added under section 74. That's the only amendment. Okay, then this circular was already there for Jan exams. Clarification on time limit for availing ITC under section 16(4) of CGST Act in respect of RCM supplies. Let's understand this. Say suppose FY 23-24 you received RCM service but did not pay RCM. You were not aware that RCM is applicable. Now, in RCM, who does the invoicing? If supplier is registered, then supplier will invoice. And he will mention in the invoice whether liable under RCM? Yes. Then to you get to know directly. Second case is if supplier is unregistered, then recipient to make RCM invoice. Now I did not make RCM invoice because I did not think that RCM is applicable. Now in FY 25-26, notice issued by department. Notice issued by department. FY 25-26 notice issued by department to pay RCM. Now I realize that, oh, I have not paid RCM. Now the question is, in FY 25-26, can I claim ITC when I am paying this RCM liability? Can I avail ITC? So the question is, the last date to avail ITC, will it be based on 23-24 or 25-26? Would you believe? CBIC has said that time 23-24 you were not aware, so you have not raised the invoice. Now you raise invoice. Now invoice issued by recipient in 25-26. So if now recipient has raised an invoice, then in that case the last date to avail ITC will be 30th November 2026. That means you will be able to avail ITC on this. But remember, this is only possible in this case. not in a case where supplier is registered and supplier has already issued invoice. That means the last date to avail ITC depends on the invoice date. But sir, if I raise invoice now, will interest apply? Obviously yes, because the liability was of 23-24. Time of supply for RCM is 61st day from date of invoice or date of payment. People, date of payment would have already happened in 23-24 only, whichever is earlier. So this is the time of supply. So based on time of supply, interest will have to be paid, but still you will be able to avail ITC in 25-26 as well. So your cost will be interest. Plus CBIC has already also said that penalty under section 122 will apply, but section 122 penalty you don't learn at inter CA. Let's have a look at this circular. 26 June 2024. Clarification on time limit for availing ITC under section 16(4) in respect of RCM supplies. It is clarified that in case where supplies are received from unregistered suppliers and tax is required to be paid by recipient under RCM, the relevant financial year for calculating time limit for availing ITC under section 16(4) of CGST Act will be the financial year in which invoice is issued by recipient. Careful. Financial year in which the invoice is issued by recipient in accordance with 31(3)(f). If recipient issues invoice after the time of supply and pays tax accordingly, they will be required to pay interest on delayed payment. Penal action, you don't learn it. Inter CA. It's there in the circular, but you can ignore because 122 penalty is not there in your syllabus. Okay, so this circular was already there for Jan 25. Now, coming to this one warranty circular, I'll tell you the speciality of this one and the second one. These two, it's renumbered as 1 and 2 because I want you to understand some background behind these two. This circular was never there in inter CA, but for Jan 25 exams, institute had added it in the statutory update. However, it's not there in May 25 ICI module. So Jan 25 statutory update, which is amendments by ICI, inter CA, has this circular, but May 25 ICI module of inter does not have it. Now the question is whether these two circulars, now one warranty circulars, this one and below this there is 2, whether this 1 and 2 are to be studied or not to be studied. Now as it was there in Jan 25 statutory update, I have kept it here, so I will explain it to you. If in future institute adds it, then it will apply. Otherwise, to my mind, it should not apply because it is not there in the module itself. But sir, if we read one extra provision, any harm? No harm, but time is essential. So I would not want you to study anything extra, but as it was there in Jan 25 statutory update, I will still teach you because this has been released once by institute. Okay, let's understand warranty and the circular relating to warranty. See this. See, there's a company called as Honda, which manufactures Activa vehicles. Now Honda gives a warranty to customer. Say suppose they give a 5-year warranty on engine. Now if there is 5-6 vehicles where the engine is completely bad, then they will replace it, and they will replace it free of cost. Replace parts free of cost to customer. Now the question is whether GST is applicable when Honda is replacing free of cost parts which is under warranty, whether GST is applicable. CBIC said no. Why, sir? When did CBIC become so good? Because they are saying free, there is no consideration, GST should not apply. But do you agree that Honda, while purchasing or manufacturing that part, they would have availed ITC? So it can be covered under Schedule 1, permanent transfer of a business asset, where ITC was taken. So if you have availed ITC, you should pay tax. Then why is government saying no GST on this? Reason being, warranty charges are already included in price of vehicle, and on that price of vehicle GST is already charged. I am not saying this, CBIC has said this. CBIC has said that when the vehicle was first sold by Honda to customer, the vehicle cost already included warranty charges. So GST is already charged on warranty charges, and that's why no GST will apply again on this free of cost part replacement. Did you understand this? Okay. Plus, sir, should I reverse this ITC? No need to reverse ITC. Why? Because I had already paid output tax on this. So no need to reverse ITC. Very good point. Honda is called as OEM in the circular, original equipment manufacturer. What is the equipment, sir? Activa. And who is the manufacturer of that? Honda. Original equipment manufacturer. Okay. So this is part 1. Now, second transaction. There is Honda, there is a dealer involved, and there is a customer. Now Honda would have provided the warranty, because on the vehicle warranty is provided by Honda, but dealer gives part free of cost. Dealer gives the part free of cost to customer. Whether GST will apply? No GST. Sir, what if they charge some nominal amount? Here also, what if they charge nominal amount? If nominal amount is charged, then GST is applied on nominal amount. If nominal amount is charged, then GST will apply on such nominal amount. That's obvious. But if no consideration is charged, then GST will not apply. So nominal amount, GST on nominal amount. That is there in both the cases. Now, do you think when Honda is providing warranty, whether dealer will actually bear this? No. Why should dealer bear this? Because dealer is not giving. So what will Honda do? Honda will pay So case 1 is dealer invoices Honda for the free of cost material. Now when dealer is invoicing Honda, the question is whether GST will apply. GST applicable and Honda gets ITC. So if you see carefully, this does not have any impact because one person is generating output, other person is getting ITC. The net impact of this transaction for government is zero. Dealer paid output, Honda has got ITC. Sir, but why is government doing this? Because please understand, on warranty charges initially, which was inbuilt in the vehicle cost, GST was already charged. Okay. Second case is free part given to dealer. Case 2. Case 1 is dealer bills it and gets that money. Case 2 is Honda gives that free part to dealer. Whether GST will apply? No GST. Should Honda reverse ITC? No ITC reversal. Why? Because initially when warranty charges was charged to customer, on that GST was already paid. So the net impact of this transaction again is zero. There is no impact of this transaction. Clear with this? So be very careful on this. Third case is Honda issues credit note. Case 3. Honda issues credit note. Because Honda would have already supplied some parts to dealer earlier. One of the part is given free of cost to the customer. So Honda will issue a credit note. Now if Honda issues credit note, Honda will reduce output and dealer will reduce ITC. Net impact of this transaction is also zero. How is it zero, sir? See, Honda is reducing his output because they have issued credit note. Dealer will reduce his ITC because they have received credit note. Net impact is zero. So whether it is case 1, case 2 or case 3, in all the cases, government revenue is zero because government has already got revenue on the warranty charges which was included in the vehicle cost which was billed by Honda for the vehicle. Clear with this? Yes. So be very careful on these. Okay. Finally, one last point is, what about extended warranty? Whether it will be part of composite supply or it is to be charged separately. If it is part of composite supply, then vehicle GST rate will apply. If it is to be charged separately, then extended warranty will be regarded as a service. See, normal warranty is already included in the price of the vehicle, but then the dealer or Honda might also provide extended warranty. Now what will be the taxability of this extended warranty? CBIC has said extended warranty, if it is provided along with vehicle at the time of sale of vehicle. Then composite supply, rate of GST of vehicle will apply. Because what is the principal supply? Vehicle is the principal supply, extended warranty is incidental or ancillary. If it is provided later, today I sold the vehicle, later extended warranty provided, then in that case it's a separate supply. This was clarified, but then further one more circular was added saying that two conditions needs to be satisfied. It should be along with the sale of vehicle plus provided by supplier of vehicle. Provided by supplier of vehicle, only then it will be a composite supply and rate of GST of vehicle will apply. Let me give you an example. Dealer is selling the vehicle to customer and dealer is providing extended warranty and it is provided at that point of time only, then it is a composite supply. If it is provided later or by other than supplier of vehicle, then it is a separate supply. If it is provided later or by a person other than supplier, like Honda is providing extended warranty but dealer is selling the vehicle, then Honda will charge separately, dealer will charge separately for the vehicle, then it is not a composite supply. So be careful about these 2 points, very important for exam. But the question here is whether it is applicable for inter-CA. I think institute should clarify this, but in Jan 25 they had included it, so it should have been there in May 25 module also. Okay, then these are the 3 discussions. Thereafter in the second circular, which was issued subsequent to this extended warranty and warranty circular, the second one was this free part will also include any other accessory, any other incidental service etc. given, that will also be included in this, and the same treatment will apply whatever is given here. Plus free service. See, dealer provides free service to customer and then dealer bills Honda, then this treatment will apply. Case 1, dealer invoices Honda, dealer will pay output, Honda will get ITC. That is normal. Clear? Let me give you an overview of this. First one, warranty charges is already included in the price of the vehicle. So after that, if any cost, any free of cost part is replaced, no GST will apply. If nominal amount is charged, GST will apply on nominal amount. Is Honda required to reverse ITC? No, no need to reverse ITC. Then say suppose dealer is involved in replacing the part, then dealer has to get that money because he has replaced a part free of cost. Case 1, dealer invoices Honda, dealer sends an invoice saying that pay me 400 rupees, then dealer will charge output, Honda will get ITC. Or case 2, Honda says take this 400 rupees part, no GST applicable. Or Honda issues a credit note of 400 saying that, see, earlier I had supplied you 100 units, now 1 unit you have used to give to customer, I give you a credit note of 1 unit. So Honda will reduce output, dealer will reduce ITC, net impact 0. Then extended warranty, if it is provided along with the vehicle sale plus provided by the same supplier, then it is a composite supply. Principal supply is sale of vehicle, vehicle GST rate will be applicable. If it is later or other than supplier of vehicle, then it's a separate supply. Okay, let's have a look at this entire circular. Circular 195 which was on 17 July 2023. When this had come na, institute had not kept it for May 24, September 24 exams. For Jan 25 they kept it. Clarification on availability of ITC in respect of warranty replacement of parts and repair service during warranty period. The OEM, original equipment manufacturer, in our case Honda, offers warranty for the goods supplied by him to the customer and provides replacement of parts and or repair service to customers during the warranty. The value of original supply of goods provided along with warranty by the manufacturer to the customers include likely cost of replacement of parts and or repair services to be incurred during warranty period, on which tax would have already been paid at the time of original supply of goods. See, on warranty charges you have already paid the tax. Therefore, in cases where no separate consideration is charged by the manufacturer at the time of such replacement or repair service, no GST is to be levied on such replacement of parts or repair service during warranty period. However, GST is levied in case additional consideration is charged for the same. These supplies cannot be exempt supplies, as original supply is likely to include the cost of replacement or repair service to be incurred during warranty period. Hence, manufacturer who provides replacement of parts or repair service to customer during warranty period is not required to reverse ITC for replacement parts or repair service. No need to reverse ITC. It's not used for exempt supply. Case 2. The distributor provides replacement of parts. Distributor was the dealer in our case. And or repair service to the customer as part of warranty on behalf of the manufacturer without charging any consideration from the customer. So he has not charged any consideration from the customer. Where no consideration is charged by the distributor from customer, no GST is payable by the distributor on said replacement or repair service provided during warranty period. In case additional consideration is charged, GST is payable. The treatment relating to input tax credit and output liability relating to replaced products will be as follows. Let's see case A. In case where the distributor replaces the part to customer under warranty, either by using his stock or by purchasing it from third party, and charges consideration of the same from manufacturer. So dealer is charging manufacturer. By issuing invoice, then GST would be levied on the consideration charged by distributor from the manufacturer. So distributor is invoicing manufacturer, dealer is invoicing Honda. The manufacturer is eligible to take ITC. Is it, sir? Yeah, Honda can take ITC on the same, subject to other provisions. No need to reverse ITC by distributor as well. Okay, let's see B. In case where distributor raises a requisition to the manufacturer for the parts, he says send me the part. Dealer says to manufacturer, I have used one part, send me back one part to be replaced by him under warranty, and the manufacturer provides the said part to the distributor for the purpose of such replacement to customer as part of warranty. Then no GST would be payable if no additional consideration is charged by manufacturer in respect of the part replaced. Further, no reversal of ITC is required by the manufacturer in respect of the same. Third is in case where the distributor replaces the part to customer under warranty out of the supplies already received by him from the manufacturer, and manufacturer issues credit note under section 34. Then the tax liability may be adjusted by the manufacturer subject to the condition that distributor has reversed ITC. Manufacturer will reduce output, distributor will reduce his ITC. Net impact of all three ABC is 0. Okay, case 3, last two, case 3, case 4. Case 3, distributor provides service. This is that free service which is provided. In addition to replacement of parts or otherwise, either for replacing parts or that free service one, to customer without charging any consideration as part of warranty on behalf of the manufacturer, but charges the manufacturer for repair service. Distributor will charge it from the manufacturer as per section 293A. In this case, there is a supply of service by distributor to manufacturer, and manufacturer is the recipient of repair service, because who is liable to pay consideration? Manufacturer. Hence, GST shall be payable by the distributor on such supplies of service to manufacturer, and manufacturer can claim ITC, net impact 0 again. Last one, extended warranty. See, we'll read this and then we will see the next one where further clarification is given. Extended warranty service provided by manufacturers or distributors to customers, which can be availed at the time of original supply or before the expiry of standard warranty period. If the customer enters into an agreement for extended warranty at the time of original supply, then it would be considered as a composite supply. Principal supply is being goods. GST would be payable on the consideration of extended warranty along with principal supply at the rate of principal supply. If the customer enters into an agreement for extended warranty at any time after the original supply, then it would be considered as a separate contract. GST would be payable by service provider, whether it be manufacturer or distributor or third party, depending on the nature of the contract. Okay. Then further clarification was issued on 26 June. After this only it was added in Jan 25 exams. Clarification on GST liability and input tax credit availability in cases involving warranty or extended warranty. GST liability and ITC reversal for replacement of goods or parts. See, earlier it said only parts. Now CBIC has clarified that wherever parts is mentioned, it includes goods also. Not necessarily a part, it could be any goods which is being replaced as part of warranty. Clarification on GST liability and requirement to reverse input tax credit when goods or parts are replaced under warranty. When the manufacturer or supplier replaces the goods or parts due to defect during warranty period, the clarification provided in para 2, second point which we read in circular 195 applies to both parts and goods as a whole. Any reference to parts should include goods or parts. That's it. Same thing, replacement of parts or goods by distributor. Same thing, because distributor when he is doing it on behalf of the manufacturer, same, it will be for goods or parts. Which is a wider term, goods or parts? Goods. Because if they mention parts, department officers will start issuing notices for something which is not a part, and they will argue that this is not part of motor vehicle. Okay. Then nature of supply of extended warranty at the time of original supply. Now see this carefully. Determining the nature of supply when extended warranty is provided at the time of original supply. Extended warranty is given at that point of time. If the extended warranty is provided by the supplier circle, by the supplier of the goods at the time of original supply, it is part of composite supply with goods being principal supply and GST is payable accordingly. If extended warranty is supplied by a different person, then it is treated as a separate supply of service. Careful. Extended warranty that time and by supplier, then it will be a composite supply. Nature of extended warranty made after original supply of goods. The GST treatment on extended warranty purchased after supply of goods. This is easy. If a consumer enters into an extended warranty contract after original supply of goods, it is considered as a distinct supply of service separate from original supply. The supplier of extended warranty must discharge GST liability on such supply of services. Okay, then there is a clarification relating to availability of ITC on ducts and manholes which are used for optical fiber cable network. Now, let me explain you this. See, for any goods or services used for construction of immovable property, no ITC. But if it is for plant and machinery, ITC is available. This plant and machinery has gone till Supreme Court's Safari Retreat case, but that Safari Retreat case Institute has not kept for inter CA. It's there for final CA. It's covered in final CA amendment video, but not there for inter CA. Plant and machinery allowed. Construction of immovable property not allowed. Then it says plant and machinery excludes land, building, other civil structures, pipeline outside the factory. Third one, telecommunication towers. Now telecommunication towers, you don't get ITC, correct? You don't get ITC for telecommunication towers. Now the question is, what about ducts and manholes which are used in optical fiber cable network? This is Jio, Airtel and Vodafone towers, no ITC. Airtel also has optical fiber cable. Jio runs only on optical fiber cable. For laying down optical fiber cable, ducts and manholes, gutter, ducts and manholes, their optical fiber cable is put, then that duct is closed or manhole is closed. That structure of ducts and manholes, whether ITC will be available, that was the question. CBIC said ducts and manholes are plant and machinery and it is not excluded in plant and machinery exclusions, hence ITC is available. So for making those ducts and manholes, whether ITC would be available, the answer is yes. Let's have a look at the clarification. Issue: whether input tax credit is available on ducts and manholes used in the network of optical fiber cables as per 17(5) of CGST Act. Clarification: ducts and manholes are integral components of optical fiber cable network, which is essential for providing telecommunication service. Under explanation to Section 17 of CGST Act, ducts and manholes fall under the definition of plant and machinery as they are used as part of optical fiber cable network for making outward supply of telecommunication signal transmission. Ducts and manholes used in OFC network are not specifically excluded from the definition of plant and machinery. Explanation to 17. They are neither land building civil structure nor telecommunication towers nor pipeline outside the factory. Therefore, it is clarified that availment of ITC is not restricted in respect of ducts and manholes either under C or D of Section 17.5. So, will you get ITC on ducts and manholes? Yes, because it is not restricted. Okay. Then clarification of availability of ITC in case of demo vehicles. What do you think about demo vehicles? See what happens. These dealers purchase demo vehicles. Demo vehicles are used for two purposes. One, display. Second, for trial runs by customers. Demo vehicle becomes a fixed asset of the dealer because it's not stock. It's not part of stock now. From the stock, they'll get it registered and then it will become part of fixed assets. So the question is, on these demo vehicles, whether you will get ITC. CBIC has clarified, yes, demo vehicles will be eligible for ITC. Is it, sir? Yes. Because it is for further supply of such motor vehicle. Today or tomorrow it will be sold. But sir, if some vehicles are only for display, show off, and only for display and they will never be sold, then in that case, if it is only for marketing activity, then you will not get ITC. But if it is for making further supply of such motor vehicle, then ITC will be available. Sir, what if we capitalize it as fixed asset and claim depreciation under section 32 on that? Then in that case, you will not get ITC, because if you have claimed depreciation under section 32 on the GST component, then ITC would not be available. These are the 3 points which are there in the circular. First one, will you get ITC on demo vehicles? Yes. Second, what about if it is only used for marketing activity? No. And the last one, say suppose depreciation is claimed under section 32, then again you will not get ITC. Let's have a look at this circular. Demo vehicles. Demo vehicles used by authorized dealers for showcasing and demonstrating vehicles to potential buyers are purchased against tax invoices and capitalized as assets in the dealer's books. Dealers may sell these vehicles at a reduced value after mandatory period. The key issue includes availability of ITC on demo vehicles with approved capacity of not more than 13, because only up to 13 vehicles are denied with ITC. And when these vehicles are capitalized in dealers' books. Clarification. Reveal that section 17.5a ITC is generally not available for motor vehicles with up to 13 passenger capacity, except when it is used for further supply, passenger transport or driving training. Since demo vehicles are used to promote and facilitate semi-pro vehicles, they qualify for ITC under the exclusion for further supply of such motor vehicles. Clear with this? Yes. Okay. And what if, sir, if depreciation is claimed? You can just mention it. If depreciation is claimed, on GST component, comma, then ITC would not be available. ITC would not be available. Clear? Okay. Okay, so now let's have a look at amendments relating to registration, payment of GST, TDS, TCS. So registration, one case has been added under cancellation, section 29. Section 29 deals with cancellation, and rule 21, suo moto, cancellation, one point has been added. What's the point, sir? Now, see this. Registration is cancelled. Then you apply for revocation. Then revocation order. Then you have to file returns within 30 days. If a person does not file return within 30 days, then officer can initiate suo moto cancellation against such person. So, if you have received revocation order, you have to file the pending returns within 30 days from the revocation order. If you don't, then in that case, your revocation will be cancelled. Technically, suo moto cancellation proceedings can be initiated again. Let's have a look. A new clause is inserted to provide that registration can be cancelled if a person does not file pending returns within 30 days from the date of order of revocation of registration. Important, can be asked. Okay. Then section 23. What is section 23? Section 23 deals with persons not liable to register. Now I have to give you some background to make you understand. Institute has kept this, but goods RCM is not there in your syllabus. Persons not liable to register. That is section 23. Correct? Now, section 23 deals with persons not liable to register. Now, section 23 provides one point saying that if you are exclusively supplying goods or services covered under RCM, then no need to register, because if you are exclusively supplying something which is covered under RCM, your output will be zero. As your output is zero, there is no question of you being liable to register. This is there. Now here they have added except metal scrap. Except metal scrap. Now for metal scrap, they have added goods RCM entry. Unregistered person to registered person, metal scrap is covered by RCM. But this RCM entry is not in syllabus. Even though RCM entry is not in your syllabus, section 23 change is there in your syllabus. So remember that metal scrap is under RCM. Though metal scrap is under RCM, you will not get the benefit of section 23, which says that you are not liable to register if you are providing something which is exclusively covered by RCM for metal scrap. Let's read. Persons who are only engaged in making supplies of taxable goods or services and the total tax to be paid on reverse charge basis by the recipient of such goods or services under 9(3) are exempt from obtaining registration. However, it has been amended to specify that this exemption shall not be available to any person engaged in supply of metal scrap falling under 72 to 81 chapter of Custom Tariff Act. This classification you don't have to remember. Metal scrap is sufficient for your examination. Clear? Okay. Third one, mark it as very important for your examination. Section 50, interest. There has been one very important change in interest. Now, they can give you this as a question. Now let's understand this interest change, which is very important. Now, say suppose output minus ITC, tax payable is 10,000 for June 2024. Output minus ITC, tax payable is 10,000. What's the due date for June? Say suppose due date is 20th July 2024. This is also the due date for filing GSTR 3B, correct? Now, June 2024, GSTR 3B due date is 20th July 2024. Now, say suppose I file the return on 22nd July. Then 2 days interest will apply, correct? Yes, sir. Because if you delay filing return, then interest will apply. And June liability, if you report in June return, interest will apply on net liability. That is 10,000. Now, please understand this very carefully. If your e-cash balance is 10,000 on 20th July 24, then no interest. So, if the balance of 10,000 was available in e-cash, even if you late file the return, late fee can apply, but interest will not apply. Careful, they can mix a question with late fee and interest. Interest will not apply if you have sufficient balance in e-cash because you have already deposited it to government's account. Late fee can apply? Yes, because for delayed filing of return. Clear with this? Yes, be very careful on this one particular aspect. This can come as an exam question in this form. Even earlier institute has done such type of questions after amendment have been introduced in the examination. So mark it as very important for exam. You copy this example and keep delayed filing of return, e-cash balance is available, interest will not apply on the amount which is available in e-cash. Plus they can ask you late fee also to mix it up very well. Okay. Interest will not apply on amount which is lying in e-cash ledger on or before the due date for filing return from the due date till the date of debit at the time of filing the return. From the due date till date of debit at the time of filing the return. So from 20th to 22nd, whatever is available in e-cash ledger, interest will not apply. Okay. Then biometric Aadhaar authentication. This was for Gujarat, Andhra Pradesh and Puducherry. Now it is extended to entire India. Then section 52, there has been a reduction in TCS rate, very important for your exams. Earlier TCS rate was CGST 0.5, SGST 0.5. Now it is CGST 0.25, SGST 0.25, total being 5%. Be very careful on this. IGST, which was 1%, it's reduced to 0.5. Don't mix up TDS, TCS. TDS is 1% CGST, 1% SGST. This is same. You write and keep. TCS has changed. 0.25 CGST, 0.25 SGST. Okay. Now section 51. There has been an amendment in section 51 as well. What's the change in section 51, sir? Listen to me very carefully. Section 51 deals with TDS. Correct? It deals with TDS. TDS was required to be done only by government authorities. Correct? Let me give you some background. Here is a supplier. Here is the recipient. Recipient is a registered person. Recipient is government, local authority, government agency, PSU, society set up by government, any authority or board set up by government. So these recipients had to do TDS of 2% because government wanted to track government contracts whether suppliers are correctly paying GST. Now, metal scrap, lot of tax evasion started, and that's when government added one more, saying that supplier registered, recipient registered metal scrap. Then the recipient has to do TDS of 2%. When is TDS applicable? Only when taxable value under a contract exceeds 2.5 lakh, excluding GST. Don't forget the basics. TDS will apply only when taxable value under a contract exceeds 2.5 lakh. Same is applicable even for metal scrap. But earlier, these recipients were only government. Now, recipient of metal scrap is also covered by TDS. Unregistered to registered is under goods RCM, which is not in your syllabus. Registered to registered metal scrap, this is there in your syllabus. Now, one more point. There are some exemptions for TDS. First one is Ministry of Defense. Second one is between two PSUs. Third one is amongst them who are required to deduct tax. Amongst them who are required to deduct tax. Amongst them who are required to deduct tax, meaning between government, local authority, government agency, PSU, society, PSU, between them, there is no TDS. Supplier is government, recipient is local authority, no TDS. Supplier is PSU, government is local authority, recipient is local authority, no TDS. So if these are suppliers and recipients, both sides are government related, then no TDS. Here they have added something, except metal scrap. Because if they don't mention this, then because metal scrap people are now added in TDS provision. Now if you mention that amongst them no TDS, then TDS will only not apply. So they have added except metal scrap. So in exemption they have added except metal scrap and they have added this entry. And don't forget the basics. 2% when the taxable value under a contract exceeds 2.5 lakh. Clear? Okay. Let's have a look at the point. The notification relating to persons notified to deduct tax is amended to provide that any registered person receiving supplies of metal scrap from another registered person shall deduct tax at source as required under section 51 of CGST Act. It is further provided that TDS shall be deducted by recipient on supply of metal scrap even when it is supplied between persons mentioned in the notification, that is authority, board, society set up by government, local authority or PSU. Doesn't matter. Even between those people, still TDS will apply. The exemption will not be available. So be careful on this. Okay, now coming to changes relating to invoice, returns, e-way bill. One new point added, GSTR 1A, very important for examination. GSTR 1A. Now please understand why this was brought. See this carefully. June 2024. What is the due date for GSTR 1? The due date for GSTR 1 is 11th July 24. Correct? 11th July 24. Now for June 2024, what is the due date for GSTR 3B? GSTR 3B, sir, 20th July 24. Now tell me one thing, should there be a mismatch between 1 and 3B? No, if there is a mismatch between 1 and 3B, department can initiate suo motu cancellation proceedings plus notice will be issued, and if you don't pay this, then next month 1 you cannot file. So there are a lot of implications if there is a mismatch between 1 and 3B, correct? Now say suppose there is a error in GSTR 1. What will you do if there is a error in GSTR 1? Sir, if there is a error in GSTR 1, while filing July 2024 GSTR 1, we can amend it. And when will you amend? Sir, August, because July return will be filed in August. What should you do now? Nothing, sir, because a return once filed cannot be revised. So if I filed GSTR 1, I cannot refile this GSTR 1. Cannot refile, sir? No. Now what to do? There is an error in GSTR 1, and let me tell you the error. Credit note not reported. Now, do you understand what's the meaning of credit note not reported? I am giving you an example. You could also miss invoice, you could also miss debit note, you could make an error that 100 rupees is mentioned as 1000 rupees. All that can happen. 1000 is mentioned as 100. Everything can happen. I am saying credit note not reported. Credit note reduces output. So if you don't report credit note, sales return, if you don't report, that means you have actually reported more sales than actual. Now if you don't report credit note, then your 3B liability will be more. That's why government has added GSTR 1A, saying that after filing 1 but before filing 3B, careful, after filing 1 but before filing 3B, if you get to know that an error has happened, you got to know that there has been an error after filing 1 but before filing 3B, you find that there is an error, then you can file GSTR 1A. And this GSTR 1A is completely optional, because only when there is an error you have to file it. When is it available? After filing 1 and before filing 3B. The change of this 1A will reflect in your 3B. I'll give you an example. Say suppose in GSTR 1 you reported 100 rupees, GST 18. Credit note of 90 rupees was not reported. Then in 1A you will report credit note. GST 16.2. Net liability is actually 10. How did you get 10, sir? 100 minus 90. GST 18 minus 16.2 comes to 1.8. So how much will come in 3B? 3B will have 10 and 1.8. If this 1A was not there, you would have paid GST of 18. Huh? Yes. Yes. Same facility will open even for QRMP people. QRMP people, if they make error in first month and second month, it will be available after filing 1. Because this is not after filing IFF. This is after filing 1 and before filing 3B. Is 1A mandatory or optional? Optional completely. Is there a due date for 1A? No due date. IFF, invoice furnishing facility, there is a due date of 13th. But this, there is no due date. Sir, one question. I have made this amendment. Can my recipient take ITC? Now, see, if you file 1A before due date of 1, then it will come in recipients to be in that month only. Otherwise, it will come in recipients to be in next month. Say suppose June, the due date is 11th July 24. I filed GSTR 1 and then I filed GSTR 1A on 14/7/24. Then this invoice or credit note or debit note will come in recipients to be of July generated on 14th August 2024. It will not come in June to be. It will come in July to be. Can institute check on this, sir? Yes. They will say one amendment was made in 1A. Whether you can avail ITC. Not now. See, you can avail ITC as a recipient, but not now. You can avail ITC next month. Careful. Be very careful. They will say this, that one of my suppliers, listen, one of my suppliers have not filed the invoice in GSTR 1. They report it in 1A on 14th. Whether I can claim ITC for June month as a recipient? No, because it will not come in June GSTR 2B. It will come in July GSTR 2B. Careful on this. Yes. So 1A is to amend any information of 1, or if you have missed out some information in 1, that can be reported in 1A. What is the due date of 1A? After filing 1, before filing 3B. Okay. Is there any fixed due date? No. Is it mandatory or optional? Optional. Let's have a look at the points related to 1A. Provided that the person may, after furnishing details of outward supply in GSTR 1 for a tax period, but before filing return in Form 3B, at their own option, amend or add details of outward supply in Form 1A electronically through the common portal or facilitation center as may be notified by Commissioner. Purpose: Form GSTR 1A allows taxpayer to amend outward supplies filed in 1 for the current tax period. Optional nature: filing of 1A is optional and it can be done only once per return period. Scope of amendment: amendment in 1A are restricted to current tax period, include adding missed details, modifying already declared details, including those from IFF for QRMP. Sir, IFF, if I have filed, there is a mistake, can I correct it? Yeah, but IFF has a due date, 13th. Impact on tax liability. Amendments in GSTR 1A affect the tax liability which is auto-populated in 3B for the same tax period. Recipient will he get ITC? ITC for supplies amended by 1A is reflected in recipient's form 2B for subsequent tax periods. Electronic filing. It can be filed only electronically via common portal or as notified facilitation centers by commissioner. Timeline for monthly taxpayer 1A is available from the due date of actual filing of 1 until 3B. For QRMP it will be available after quarterly filing of GSTR 1 and is open till filing of 3B. What can you amend? IFF information you can amend? Yes. Special conditions. No separate amendment facility exists for IFF record for first 2 months. See, third month you can amend it. Of a quarter. Changes in recipient GST number must be rectified in the subsequent tax periods GSTR 1. GSTR 1A has no fixed due date but is limited to filing timeline of 3B for the same tax period. Sir, what if I get to know the error after filing 3B? Then in next GSTR 1 you can use the amendment option. And is there a last date to amend? Yes, 30th November after the financial year or date of filing annual return, whichever is earlier. That's already there. See, amendment option was already there. 1A is only a bridge between filing GSTR 1 and before filing 3B, so that my 3B reflects correct values. That's the whole purpose. Okay. Then invoice wise details of interstate supplies to unregistered person in GST return. The invoice value. Now, okay, let me give you some background. What do you report in GSTR 1 or 1A or IFF? You report B2B. B2B, whether it is inter or intra, you report invoice wise, separate invoice wise details. B2C, if it is intra, then you report consolidated number, and if it is inter, up to 2.5 lakh consolidated but state wise, more than 2.5 lakh invoice wise. Now what government has done is, this is amended to 1 lakh. So any invoice of more than 1 lakh, interstate B2C, careful, interstate, not intra, interstate B2C more than 1 lakh, you have to provide invoice wise reporting. Don't mix up with revised invoice 2.5 lakh. See, in revised invoice, in invoice chapter also you'll find revised invoice 2.5 lakh. If it is up to 2.5 lakh, you can consolidate. If it is more than 2.5 lakh, you have to issue separate revised invoice. That limit remains unchanged. Don't change 2.5 lakh everywhere in the notes. Revised invoice 2.5 lakh, that remains unchanged. This one of reporting in GSTR 1 has changed. Reporting in GSTR 1 has changed. Revised invoice 2.5 lakh limit remains same. Careful about this. Maybe in future they will amend it to make it consistent, but as of now, reporting requirement of all the invoices B2C 1 lakh inter, more than 1 lakh inter has to be reported separately. Revised invoice up to 2.5 lakh you can consolidate, more than 2.5 lakh you have to issue separately. Clear? Let's read it. The invoice value threshold for furnishing invoice wise details of interstate supplies made to unregistered person in form GSTR 11A has been reduced to 2.5 from 2.5 lakh to 1 lakh. And I mentioned IFF here. That's not there because why is IFF not? IFF does not report B2C. IFF we report only B2B transactions. Is reduced from 2.5 lakh to 1 lakh. Similarly, the upper limit of invoice value for consolidated details of state-wise interstate supplies made to unregistered person for each rate of tax in form GSTR 1 has been reduced from 2.5 lakh to 1 lakh. So invoice value 2.5 lakh to 1 lakh. Sir, what are these 2 points? One is this, that more than 1 lakh you have to report invoice wise, and then second one is up to 1 lakh you can consolidate. So you can copy this diagram and keep. Yes, okay. Then the due date for GSTR 4 for composition, earlier it was 30th April after the end of the financial year. Now it is 30th June. Careful, important provision, can be asked in exam. Annual return exemption has been given up to 2 crores. No need to file annual return for FY 23-24 as well. So these were the changes relating to your examination for May 25. Wishing you all the best for your examination. Do well. And just before leaving, I will give you a quick run up of whatever we have discussed so that we can quickly summarize everything. See, first thing, hybrid annuity model. Hybrid annuity model, what's the time of supply? It's a continuous supply of service. So you'll use date of invoice, date of payment, or due date to issue invoice. Due date to issue invoice will depend on completion. So you are basically checking completion, invoice, payment, whichever is earlier will be the time of supply. 10(1) CA, place of supply to unregistered person. If it's a e-commerce operated transaction where there is a bill to ship to model, then in that case, if B is unregistered, if B is registered, then no problem, use 10(1)B. If B is unregistered, then which address will you use? Address of delivery, that will be the place of supply. In this example, Gujarat will be the place of supply. That's what is clarified by CBIC. Then sale of platform tickets, renting of waiting rooms, cloakroom, battery operated service provided to individuals is exempted. 2 zones of Ministry of Indian Railways exempted. Then accommodation, hostel, etc. will not get blanket exemption. They will, blanket exemption meaning no amount. Any amount exemption is there for residential dwelling. They will get one exemption if the value of supply is 20,000 per person per month, provided the minimum period is 90 days. Then ancillary services provided by transmission and distribution of electricity providers exempted. Research and development services enjoys an exemption for grants which they receive. Affiliation service for government schools enjoys an exemption. NCVT entry has been enhanced. They have also added National Council for Vocational Education Training in the entry of National Skill Development Corporation and made it very, very wide. So vocational skill courses are also covered. National Skill Qualification Framework, which involves lot of ministries, that is also exempted. In fact, this is available on NCVT website. Then wherever NCVT was mentioned, that is replaced by NCVT. Reinsurance of insurance which is exempt is also exempt. Affiliation services to universities will be taxable. Affiliation services to schools will be taxable except for government schools. Incidental charges for goods transport agency will be composite supply unless it is provided separately and billed separately. Other than commercial property, other than residential, meaning commercial property, from unregistered to registered, this combination has to be met, then it is under RCM. Input tax credit, section 16, say suppose your registration is cancelled, now you get a revocation. The time limit to avail ITC will be the normal time limit, that is 30th November or 30th November or date of filing annual return, whichever is earlier, or 30 days from the date of order of revocation, whichever is later. Fraud cases, no ITC. RCM cases, ITC will be available based on the invoice issued. So even if RCM is of earlier years, if I issue invoice now, then today's time limit will be applicable for availing ITC. Then warranty, you very well know that warranty charges are already included. So any supply which is made free of cost, no GST, no ITC reversal as well on those. Then extended warranty, if it is given that point of time plus by the supplier, then composite supply, principal supply rate will apply. Any other case, the rate of providing that service will be applicable. Then optical fiber, ducts and manholes, do you get ITC? Yes, ducts and manholes ITC will be available because they are plant and machinery. Demo vehicles, you will get ITC. Yes, demo vehicles ITC will be available. If you claim depreciation, no. If it is used for marketing service, no. Then suo motu cancellation, one point has been added. What's that one point? If you don't file the returns within 30 days from the order of revocation, then suo motu cancellation proceedings can be initiated. Metal scrap person has to register even if his entire liability is covered by RCM. The exemption which is available in section 23 is not available for metal scrap. If you have sufficient balance in e-cash ledger, then interest will not apply. Very important point. Biometric Aadhaar authentication extended to entire India. TCS rate reduction 0.25 is the rate, very important for exam. TDS, metal scrap, if both are registered, then TDS will apply on metal scrap. Recipient will have to do the TDS. Other provision remains same. The exemption for amongst them is not applicable for metal scrap. GSTR 1A, after filing 1, before filing 3B, changes can be made. Very, very useful to get the correct values in GSTR 3B. Then invoice wise details, reporting has changed. More than 1 lakh, you have to give separate details, B2C inter. Up to 1 lakh, you can give consolidated state wise details. Due date for GSTR 4 will be 30th June, and there is an exemption for filing annual return up to 2 crores. So this was it. Again, wishing you all the best for your exams.